Hello guys, it's Max here from Daily Market Movements, and in front of me we have the Nasdaq 100 futures chart. Now yesterday when I sent the video we were trading at roughly 13,000, but just after I uploaded that video going into the US close, the Nasdaq 100 sold off very heavily indeed going into the close. Now I was very worried when my Nasdaq 100 closed yesterday because we were down at the swing lows, and we were basically testing the bottom of that really nice looking candlestick that we formed back on Tuesday, I think it was. So it was Thursday, Wednesday, yeah. So back on Tuesday, down at 12,750, and at one point during today's trading session, when we were trading as low as 12,670, I was very worried indeed. I thought that this was going to continue to break down towards a 200-day EMA. However, since then, the US markets have of course opened, and we're now trading back up near 13,000. So I still do have my buy position here in my Nasdaq 100, which I opened down up at 13,200. So I'm roughly 200 points in loss, but I'm going to keep it, guys. I'm going to keep it, okay? The only way I'm going to close it is if we get a daily close around this area here, which is of course the bottom of that hammer candlestick that we formed. One thing that I would be worried about is the RSI. The RSI isn't quite yet at 30, which means we could still have some way to go. So I'm not going to add any more positions in today's trading session or going into Monday. I prefer just to sit on the sidelines and just be patient, see where the market goes, okay? I haven't got a massive trade up at 13,200. I've only dedicated a very small amount to my account to this trade, but I just want to see where the markets go because, you know, I personally could see the market slipping even lower here. You know, if the RSI goes to 30, I think it would make sense for there to be a 10% correction down to at least 12,000, 12,500. So those are areas which could easily get targeted. Yesterday has been a very good trading session. You know, the fact that we've ended it in the green, but it's not good enough for me to add more buy positions. You know, it's not that really strong candlestick that I wanted. You know, yes, we're up 1%, but I want to see us at least trading above 13,000 or at least back above the 50-day EMA before I can even think about adding more to my position. So I am still bullish here in the Nasdaq 100. You're going to see a lot of articles come and get posted during the weekend, or this is just the beginning for stocks falling and blah blah. It happens all the time, okay? Every time when the Nasdaq 100 dips 2 or 3%, investing.com, some analysts come out on CNBC who, you know, missed this massive rally back at the start of the year. They'll come out and say why stocks are going to be very bearish and how they're only just starting to fall here, and that's just basically to scare you guys. They want to scare the average retail trader so that it then causes more of a dip, and then they can then inject the money that they've had sitting on the sidelines dating back to March because they missed this opportunity here when stocks rallied, okay? So don't be fooled by all of these articles that will be posted about, you know, how the market is going to crash and stuff like that, because it happens all the time. I can tell you that from my experience. But what I'm going to do, as I just mentioned, I'm going to be sitting patiently on the sidelines, especially going into Monday. Monday will be a very interesting trading session indeed. It will tell us whether we do continue our upside momentum here, or whether we, you know, go and retest that 12,750 area. But as soon as we get a daily close below 12,750, I then become short-term bearish on the Nasdaq. I'm not going to short the indices, okay? I do not short the US indices. That's one thing I do not do. I simply just sit on my sidelines and wait to buy a deeper dip. Indices are a product. They're designed to go higher, and that's what they've been doing for the past couple of decades, as you can see. I do not short them. If you do short them long term, you will probably likely lose money. Very difficult to predict when massive sell-offs like the one that's happened this week and last to happen. You know, who would have known that the 10-year bond yields will be up at 1.5%? Very difficult to predict. It's just been one of those trading sessions which, you know, where fundamentally and technically it doesn't really make that much sense, but you cannot argue the price, okay? The price is always right. It is what it is, but you just got to be patient and be smart about it, and that's exactly what I'm going to be doing. So Monday will be very interesting. I'm going to keep my buy up at 13,200, but I'm not going to add any more until I get that really positive candlestick which tells me that, you know, the worst is over. But that being said, I wouldn't be shocked if we did fall another 3 or 4% to make it a 10% correction here in the Nasdaq 100. And actually, part of me actually kind of wants it to, because I'm very bullish. There's some fantastic value out there, especially in the tech stocks. So a 10% correction wouldn't actually be the end of the world if it would mean that, you know, that value would become even more cheaper on some of these big tech stocks.